What's going on, guys? Welcome to the Weekly Technicals live session for January 6th, 2019. And we are going to get started with some clean charts. So I've cleaned up, pretty much deleted every single thing off of all of the majors. So I don't know if we're going to get to all the majors, but we're definitely going to cover dollar index, euro, and also cable, and EURGBP as well. So let's get started with the dollar index, and we're gonna go out to a monthly perspective, and I'm gonna grab my trend line. So looking at this market, I still think dollar index is going to run up higher because of the fact that we've come down here, and we took the liquidity below this low, and from there we pushed all the way back up, and this is basically a break in market structure. So we could definitely come back down here and retest this high, and that high is 95.15. Just make sure that visibility is for months all the way down to minutes. So I keep my 4 hour to 1 hour, and then 59 to 1 minute. And okay, so this is the next potential level of support, and that's really the only thing that we need to have on here. And we already know that we have this 97.70 up here, which we'll get to that on the daily chart. So let's drop down to a weekly perspective. Okay, so there's really nothing that I want to mark up on the weekly either. Okay, alright, so looking at the daily, you guys can see that we're still in that consolidation. I don't know when we're gonna start getting some movement out of it, but we do have to consider that here on the daily we have these equal highs at 97.70. So adjust your level to 97.70. Alright, and this is going to be black. Alright, so we've also got relative equal lows down here as well at this 95.60 level. So we can, I'm not actually going to draw a line on that. I'll just kind of put an X, and I'll keep this visible only on the daily. I guess I will make a line. It'll make it look cleaner. And the low is 95.68. This low 95.65. So we're going to use 95.65. So this is another, this is kind of the consolidation or the range that we're trading within. We've got the equal lows and also the equal highs. All right. So in terms of, where we're going to go next, we really need to break out of, either below these equal lows or kind of start pushing up above these equal highs. But based on the higher time frame perspective, looking at the monthly chart, we already know that this blue line is monthly support. So, if we do trade lower, they could definitely come back and, retest this 95.15 and 95.20 level, which we can also put a line at 95.20 because that's the next level right above 95.15. So the next 5 level, actually that doesn't look good. We're just going to take that off. So just have in your notes 95.20 to 95.15. We could potentially come down for dollar index. And if we start pushing lower, from there, then we're more than likely going to clean up this liquidity, and then we'll have to be targeting or looking for a potential run down here again. But I don't really think that we're going to get that based on, you know, what the monthly chart looks like, but it's really going to depend on how they behave once they get down to this 95.15 and 95.20 area. And, you know, from there, I really would expect a, you know, run back here above 97.70, because we do still have, you know, liquidity resting above the market. We've got relative equal highs here, you know, a bunch of liquidity really above all these levels back up in here. So if dollar index could really start gaining some strength, break out of this consolidation, get back above these equal highs, you know, we could really start to see them start, you know, testing up this 98 big figure to potentially, you know, full dollar, so that 100 level. So that'll be interesting to see, but, you know, ultimately for that to happen, we have to get back above these equal highs first. So since this is the weekly technicals, guys, we are going to keep this, you know, on a, you know, we're not going to go any lower than a daily perspective, because we are kind of rounding out what we think is going to happen for the week. Now those of you in the premium group will, you know, on the daily technicals this week, we'll dive deeper. So we are back to during our normal schedule of daily technicals this week, every Tuesday, Wednesday, Thursday, 2 p.m. Pacific Standard Time. And we'll dive deeper into the 4-hour and hourly charts and mark up any levels that I see that are relevant to where the current price is at during those sessions. So just have these levels on your charts for right now. Be aiming for that 97.70 level in terms of an upside, but, you know, you want to make sure that either this liquidity below here has been cleared out first, or we can get some type of higher high to form back up above this 97 big figure. So let's move to euro dollar, and we're going to mark this one up as well. We're going to start with the monthly. Alright, so if we're expecting higher prices on dollar index, we have to be assuming that that's going to mean weakness for a foreign currency. And if we take a look at this, the market was making higher highs, higher low, higher high in terms of, this is a monthly chart, so this is, you know, a lot bigger time frame than we're normally analyzing on. So you have to understand that this trend is, you know, quite a long time. It's not just you know, a few days or something like that. So, and if you really want some more context, you could see that the market broke down here. We've come back up, retested, right? Because old support became new resistance, sold off, broke below this level here, right? So now we've got a break in market structure on the monthly, similar to how dollar index had the break in market structure on the monthly as well. And the low of this candle is 1574, so we will use 1570, and that will be red because that is a resistance level. And months, weeks, okay, perfect. So if we do push up any higher, anticipate, you know, them to find some support around, some resistance around this level here. So again, that level is 1.1570. So have that on your charts. And, you know, I don't know necessarily if they're going to get up there, but we just have to keep these levels on our charts just to understand where we are in terms of the higher time frame market structure. So if we drop down to a weekly now, you guys can see that we've got high back here, market breaks down, forms a low, lower than this low, right, which is the same monthly low that we were looking at. So we've got a little breakdown here, but the bodies of the candles haven't closed below it yet. Then the bodies close below it here, come back up, maintain this little consolidation right here, start to sell off again. So if you look at the price action on the weekly, what do we have? Low, or low, high, lower low, right? So we should form some type of lower high, right? So where would we anticipate that potential lower high? Somewhere around this area, because this is where the monthly resistance is, right? So you have to understand that every time frame is relevant. You just have to understand how that level is, how it fits in on each time frame. But price is fractal, meaning whatever time frame you're looking at, that same piece of price action is there on every other time frame in the charts. So something that's going on in a monthly is relevant to something that's happening on an hourly chart. But if you don't have a monthly level drawn from the monthly chart, then on the hourly you'll never know what that level is, right? So if we, just for example, if we go down to an hourly right now and you look at this level, you would have no idea what this level actually is up here, right? But because we marked it up on a monthly chart, coming down to an hourly now, we know what this level is. We know that that's resistance. And if you look at all of the liquidity that's built up above this massive consolidation, you can see how that would be a potential target for the market to start running up. So let's go back out to a weekly. And what I'm going to be looking for is this market to start breaking down. Once we get to EURGBP, you guys will see that Euro's either going to remain in a consolidation or push up higher. So that push up could lead us to this 1570 level. But we'll talk about that when we get to EURGBP. So let's move down to a daily. Now, although we're going to be back in the charts this week, we're not going to be forcing a trade, right? Because we still are in this consolidation, right? We've got relative equal highs, so it's suspect to expect a potential rally, right? We have relative equal lows though, so it's similar to how dollar index is. We could see, it's hard to judge what side they're going to actually go for until they get out of the consolidation. So once they do break above it, we'd like to see some resistance come in at this 1570 level and then start to see them trade lower. But we don't know whether or not they're going to push up or start just dropping it lower because they're in a consolidation. So I don't trade during consolidations, right? I need some type of confirmation. So if this market can start breaking down early on in the week or something like that, then maybe we'll have something with euro. But I'm more likely to probably participate in cable this week, if anything. So we'll see. But I just wanted you guys to know that I'm not going to force any type of trade. Like, this is still early January. The markets are still in a consolidation. It's clear that they're in a consolidation, and I don't want to be working within too much of low probability setups. So I'd rather wait for them to get out of this daily range, which will present much higher probability setups on the lower time frames. So let me delete this. In terms of daily levels, there really isn't too much. We're going to go ahead and mark out these equal lows down here because this would be our first target of liquidity on the daily chart. So this low comes in at 1267 and this one comes in at 1269. So we could just use the 1270 level. Right, and if we get below there, then we'll start looking for this low. But there's no need to keep that level on our chart yet, just to keep them nice and clean. So I'm trying to keep my charts super clean this year. I feel like they got a little messy last year. Okay, so we got some equal highs here that we want to mark out. And I do want to go ahead and make this black. And visibility, make sure to turn off weeks and months so that way it only shows on the daily, 4 hour, 1 hour, and 15 5-minute time frames. So we can put our liquidity X here because we know that will be a potential target for liquidity. And let's adjust this level here. We've got 1.15 big figure, and this one comes in at 14.96. So 1.15 big figure would be a good area to have. It's a nice big figure level, and we've got equal highs right there. So if we do push higher, that's likely where they'll be going. Now, in terms of getting on board for some type of opportunity for a trade, there really isn't anything for me to justify taking a trade off of within this area that it's in here. So I'd like to see them break above this, and if we can start getting some type of rejection, then we can look to sell it around this 1.15 big figure and target these equal lows down here. That's how I'd like to play this. I don't want to be on the buy side too much. I'd rather have some sort of a confirmation to the break of an upside before getting in on any type of buy setup. So that's my trading style. But I mean, you guys, depending on what you've kind of leaned more towards in terms of your trading style, I mean, you can definitely look for short-term day trade opportunities that will take you above these equal highs. If we can get some sort of start closing with nice big bullish candles or something, if that permits your trading style, then you can definitely trade this. For me, that doesn't fit my trading model, so I would need to see some sort of a breakdown after clearing out these equal highs, and then I would be targeting the equal lows at 1270. So these are the only real levels that I'm going to keep on my charts for now. We're again stuck within this consolidation here between these equal lows and equal highs, just like how we have on dollar index, right? So take that into account if you're if you are trading this week. That doesn't mean I'm not trading this week. I'm going to be looking for opportunities, but it's really going to depend heavily on whether or not we can get above or below these consolidations, because I don't want to go operating in just, in my opinion, a nasty consolidation. So let's move to GBPUSD. And if you guys looked at the markets at all last week, on January 3rd, we seen a pretty nasty spike to the downside here. It's about over 250 pips for that day for British pound, and dollar yen. Actually, a lot of the yen crosses had a pretty significant sell-off, so they were destroying retail traders last week, and I am glad that I was not participating. This is why I wait for a few weeks at least for the market to kind of get back in sync. And while I will be looking at the markets this week, that doesn't guarantee that there's going to be something that I'm going to be trading on 100%. And based off of what we've seen so far, in my opinion, there's nothing really worth taking a trade on yet. So that may change depending on Wednesday or Thursday. It just depends on the price action that we can get up into that point. So a lot of people are going to be considering this spike to the downside some sort of turning point, and while that could be the case, we need to see some sort of break in market structure first. So just wanted to address that before we go to our marking up of the chart. Alright, so looking at this, if we do scroll out, you guys can see that we still are in a significant downtrend, right, for cable. So again, with dollar index expected to rally, we're going to be looking for potential weakness on GBPUSD. Now, if you break down, don't ever think it's too complicated to define what type of trend the market is. It's really simple. Whatever time frame you're on, just go there and figure out, is the market making higher highs and higher lows, or lower lows and lower highs? So you can clearly identify with this market we've got a high, low that's broken below a previous low, right? Notice how they're equal lows as well. We push back up, we make a lower high, right? This high is lower than this one. We push lower, we make a lower low, lower than this low. And you guys get the picture, right? So lower high, lower low, lower high. What are we expecting? Potential lower low. So where would the next level of liquidity be that we would need to have on our chart? Now again, this is a monthly chart, so this is a significant, you know, range away, but in terms of downside objective, I want to have this on here for future reference, because if we do get some type of, you know, massive sell-off in GBPUSD or something, this is going to be the area that they're reaching for. So, you know, if we get some sort of that push down and we're on a daily or weekly chart, we see this level again, we'll know that that's where they're going to be targeting. So 19, the low is 1904. Alright, so this will be 1905. Alright, so that will be our target, and there's really nothing that I want to mark up on the monthly. So if we drop down, oh wait, make sure to have your visibility. I always forget about this. Alright, so you guys can see that we've got a nice little bit of liquidity. So that we're on a weekly chart now. We've got, you know, relative equal lows up in here with the you know, a lot of wicks and bodies of the candles, but there's a lot of liquidity built up below here. It's a little consolidation as well. So we will see in terms of downside objective if we can reach for that. So if you look at last week's weekly candle and the previous 2 weeks, you know, with it being the holidays, we really have not had any, you know, big body candles. You know, last week we did have that sell-off, but ultimately, you know, the body of the candle very, very, very small. So there's not much liquidity being poured in these markets right now, right? You can see here, big body candles, big body candles, big body candles, big body candles, relatively big body candles. Like, this is very small. So we can expect some volatility once the markets, you know, get back in sync come, you know, later January, early February. We'll probably see, you know, a little bit more volatility, but right now there's not much liquidity in these markets at all, and you can tell by the small body candles. Okay, so again, in terms of where we are in terms of overall market structure, high, low, lower than the previous low, old support right here, right? So we need to draw this out. I'm going to use the body of the candle, so we'll just use the body of this one, 2742. So you can use 2740. And this will be red. So I know this may be going by kind of slow, guys. I'm sorry, but we are I'm just trying to have my charts kind of ready for the year, and I like to just kind of do this once a year and really just have like clean charts and know my levels, know what I'm looking for. And I really haven't been paying much attention to the charts at all these past few weeks, so just trying to get myself kind of back in sync, and also, you know, where overall my opinion of where the overall market's going to be heading. So if you look at this the level that we just drew out, you can see how the bodies of the candles are remaining below that. So we spiked through it last week, but we're kind of remaining below that. So I would like to see the market start rolling over and see some significant weakness, because retail is going to be thinking that this is like a turning point or this is a low. And again, that could be the case, but we need to see some type of break in market structure to the upside before that happens. So what I'm believing this to be is just be a suspect low, and look for the market to find some resistance and ultimately come back down here, take out the liquidity below there, and start targeting our older liquidity back down below here. So we could see some significant weakness on cable, but for that to happen, we need to see respect of number one, this level, and I don't want to see them break back above this high back here in terms of the market structure we've got going on here. So they should continue lower. If we get back below this low here, we should start expanding pretty quickly for the liquidity below these lows. Alright, so now we're on a daily chart, and this is also a good example so you guys can see kind of marking up these levels on a higher time frame. Look at how they're respected on these lower time frames, right? So the weekly level, now we're on a daily chart, you guys can see market retested support, broke through it, came back up, acted as resistance. So I'd like to see them hold this as resistance and continue pushing lower. And this level is, anywhere in between 27 big figure to 27.50. Ideally, I'd like to see them hold this high here at 28.20. And if that's the case, we should start getting some expansion to the downside. So there's no other levels that I want to mark up on the daily chart here. I just want to keep this one level. That's what we should use as resistance. And in terms of target, we already know that we're going to be looking for this low back here. Alright, and EURGBP. Let's see, let me go out to a monthly. Alright, so you guys can see with this one, we have kind of been trapped in here for a while. In my opinion, it looks to me like we've just been gradually rolling higher though. We've got this this low, push up, make a higher high above these highs, come back down. Failure to get below this low, we start pushing up and we leave equal highs, right? And there's also liquidity resting above here, and also liquidity resting back above here. So to me, I think, I don't know when, but we're going to start seeing some expansion longer term probably for EURGBP. So it just looks like it wants to push higher to me. That will change obviously if we get back below this low, because at that point we would have broken down, and then we could view this as a potential breakdown and look for these equal lows down here to be targeted. But as of right now, this pair to me looks like we're going to start pushing higher. There's really no level. I guess we can mark out this, and we'll mark out the equal highs. So this level is 93.06, so just use 93 big figure. And that one will remain red. And this high is 90.98. So you can use 90.95. And that one will be red as well. So that will be our targets in terms of the upside. Now our invalidation level, or the level in which we'll start looking for lower prices, will be below this low. So this will be blue. That will kind of be a trigger letting me know that's going to be when we're going to start looking for sell setups. The low is 86.55. So make sure that you guys are also marking these levels on your charts as I am as well. Or if you're not able to do it right now, go back through the recording, pause it, and then mark up the specific levels. That way your charts are the same setup as mine. You know what I'm looking for, and as we're covering the markets, for you guys in the premium group each day during the daily technicals, you can kind of follow along in terms of where we're at in the lower time frame in respect to the higher time frame levels that we marked out today. So we've got our monthly levels on here now. Let's drop down to a weekly chart. You guys can see this is the consolidation, if you would say, that we're kind of held within. So this is like the range. But in terms of what's going on here in price action, you can see that we've broken back above this high, so we could come back down and retest this level around the 89.40 to 89.50 area, which we're at 89.50 now. So we'll see where the market opens and everything for this week, but ultimately I'd like to see this start trading higher, and that's why I said earlier when we were looking at euro dollar that I would probably expect either a consolidation to higher prices on euro, and we could see some weakness on GBPUSD. So we also have all that liquidity that we mentioned on GBPUSD, and with the rally of EURGBP, we could definitely see some weakness in cable. So just based on the euro dollar price action we've seen, I think that's going to be the one that they're going to hold in a consolidation. And I don't know why, but I just have a feeling that this is going to be the one EURGBP that they're going to start driving higher. And when that happens, we could definitely see a significant push lower for GBPUSD, and also vice versa for a push up in EURUSD. So I'm more likely to believe that we'll see significant lower prices on GBPUSD, euro dollar held in a consolidation, and this pair EURGBP pushing higher. Alright, that was like a tongue twister. Okay. So in terms of weekly, there's really nothing else that we need to mark up. We could probably drop down to a daily now. And the next thing that we want to have on our charts is, if you look, we were kind of in this tight little consolidation here, and we kind of broke out and gapped up, had a lot of volatility, and started pushing higher, and ultimately we stopped before that high, and then we came up and tested it one more time and then sold off. This level, the high is 89.44, so we can use 89.45. Will be our next level of support. Right, so you can see we already tested it one time here, and then we pushed all the way up, and that's where we left those equal highs. And on Friday we pretty much closed right at the level again. So I'm wanting to see whether or not we're going to be able to find some support here and trade higher, or are they going to start pushing for the liquidity below here, which could ultimately take us back into this area here and potentially lower. So we will see in terms of what we get, but I'm again leaning more towards a bullish EURGBP, and just based on the liquidity that's kind of built up above it, and the fact that we're all the way at the top of this range, I think that we're going to continue pushing higher, but again what I think doesn't have to happen. So based on the technicals though, that's what I see, and that's what I am going to be trading in line with. So I'm going to be trading in line with basically a potential weaker British pound, and expecting potential consolidation on euro dollar, and ultimately I'd like to see strength on dollar index. So let's look at the upcoming news events for the week, and then we'll wrap up this weekly technicals. I'm not going to go over any more pairs because these are really the only ones I'm going to be watching, and personally, I don't like looking at that many other pairs because then I feel more tempted to kind of look at them during the week, even when I just go over them in the weekly technicals. So we can briefly look at them, just like we already know that dollar yen had a massive sell-off. We talked about this. We pretty much talked about them all in last week's technicals, but I don't really know what to expect with this pair. I'm not really observing it. Australian dollar, we're still, to me, looks like we could see lower prices, but we are gaining some strength away from the low. So if we can get some type of break to the upside, then I'll be looking for higher prices on this. New Zealand dollar looks like we could see a potential low being formed and again trading higher, but for me to be convinced of that, I would have to see some type of break to the upside in terms of a higher high. Again, these aren't pairs that I'm really watching. I'm just kind of telling you guys my quick little analysis before we go over the news events. And dollar CAD, we mentioned this last week, how we got back above our level here, and ultimately after clearing out that liquidity, we started pushing lower. So if you guys remember, I mentioned that if we can stay above there, we were going to be looking for the 1.38 big figure level. As you can see, we were not able to maintain strength, and we started selling off. So this, to me, with this significant sell-off, I'm interested to see whether or not we start targeting all these lows in here, because we did have quite a nice run up, and relatively long as well. So we'll see if we get some strength to the downside that would push below here, but with expected higher dollar index, I don't want to be on a short bias for dollar CAD until I get more of a confirmation. So in order for that to happen, I'd need to see like some liquidity be taken out down here, and also see dollar index start breaking down as well. So again, for dollar yen, Australian dollar, New Zealand, and dollar CAD, I'm not really going to be watching those at all or really talking about them. I'm just going to really be refining my focus to strictly dollar index, EURGBP, and EURGBP. So if you guys have questions about them, if you're still able to ask me, and just post in the comments, or reach out to me on Telegram, and I'll cover pretty much anything that you have a question with about those pairs. I'm just not going to be personally going over them, or also looking at them too much, but I'll be happy to answer any questions about them. Just understand, for the most part, I'm not going to be monitoring those pairs. I really want to refine my focus this year to how I did in 2017, when I was just focusing strictly on like two pairs, so Euro and GBP. Last year towards like the fall, I started trading like Australian dollar a little bit, and dollar yen, and so just understand that the signals as well will really just be Euro and British pound. Those are kind of like the bread and butter pairs for me, and in my opinion, they're the most, like, when dollar index is moving and they're moving, those two pairs are the most in sync with dollar index, in my opinion. Everything else, it definitely trades in sync with dollar index, but these two really reflect dollar index in a very easy to see, I guess, and easy to interpret way for me. So let's go ahead and cover the news events, and then we'll wrap this up. So for Monday, January 7th, we have some dollar news and some Canadian dollar news at 7 a.m. So for New York session, and some Australian dollar news for Asia. And I'm just trying to see if there's like any major events. Oh yeah. So looks like we have FOMC this week. So that, to me, isn't necessarily a bad thing. Oh, and we have a rate announcement for dollar CAD. So this could actually be a pretty busy week. So, again, in terms of taking any trades, I don't know if I'm going to be taking any trades particularly, but this could be a good week for volatility to really get these markets out of the consolidation and set up some nice trading opportunities for the rest of the month and going into February. So, don't be overly anxious to be in a trade or, jump back into the markets with it being a new year and all that. Wait for the opportunity to present itself, and also, line up with, both your technical and really your fundamental analysis. So fundamental in terms of, looking at these news events, we know that we're going to see volatility for this rate announcement, and we know that we're going to see volatility for FOMC. So with these news events for the week, maybe there's going to be an opportunity Monday, Tuesday, or after FOMC, we'll see an opportunity Thursday or Friday for New York session. But we don't know until, the markets actually start trading. So we have to go in with the expectation that we may not be taking a trade this week, but we have to be looking at the fact that this could be the week where we get some volatility to get us out of these consolidations so we can get back to normal, market conditions. So market, trending conditions where there's high probability trading setups. So that is really it, guys. Just at about 45 minutes here, so I'm going to go ahead and wrap it up. Hope you guys enjoyed the session. I will stick around for about another 15 minutes or so and answer any questions you guys have. Let me just stop the recording real quick, and then we'll jump into that.